situation because we now see, no surprise, of course, Saudi Arabia is up substantially, but Brazil is up. And a number of these emerging markets are flat and they're moving sideways. They're not going down. You have Mexico, Taiwan, Japan, Thailand. These countries are really moving sideways. So at the end of the day, it's going to be very interesting to see how this pans out because if you take a big market like India, they are not down as much as the S&P. They're down, but not as much. And I believe they can weather this storm. And of course, China will probably be in a fairly good position, given the fact that they are not exposed to the situation in Europe so much, although they're exporting to Europe, but they're not exposed as much. So it's going to be a very mixed picture, I would say. And it's going to be very important for people to be stock picking, being very careful given the fact that interest rates are going up.
Okay. Mark, can we carve out Russia? Is it idiosyncratic when we look at other emerging markets? Is it a knee-jerk reaction we're seeing across the EM space, and then there's an opportunity to kind of rebuild positions in other markets? Or can we not overlook the energy implications for countries like India and Turkey?
Oh, there's no question. With oil prices right now over 100,000 barrels, it's going to affect a number of countries in terms of their inflation numbers. But at the end of the day, if you take a country like India, they're more dependent on coal for energy production, and other countries have alternatives as well. So we found that, in fact, the oil price alone is not really going to kill these markets. And countries like Brazil, of course, producing their own oil. So it's a very mixed picture, and at the end of the day, Russia has not really been an important market for us in any case, and I think it's true of most of the emerging market investors. Russia has not been a big factor. What's dragged down the emerging markets index, of course, is China recently, but that could change. China benefits from the situation.
Okay, Mark, I want to get your views on China shortly. Just to update you and the viewers, we've got some lines crossing. Britain's Prime Minister Boris Johnson will be addressing Parliament on the situation in Ukraine this afternoon. He, of course, announced initial sanctions earlier this week. Many saw them as not strong enough to do much to hurt the Russian economy. We'll see if the UK can come out with anything stronger in response as we continue to monitor how lawmakers across the West are responding to these actions. By the way, Zelensky, the president of Ukraine, saying Russia wasn't able to break the contact line in the east of the country. These headlines continuing to cross. Mark, the role then of China, it has its relationship, it's strengthened that relationship with Moscow. We'll see if it steps in regarding capital markets and financing for Russia at some point. But the role of China as a potential safe haven, is that where, and is that how investors should be looking at China?
Yes, I believe so. I mean, there's no question that the Chinese will try to play a little game. In other words, they will not move one side or the other in terms of Russia versus Europe. But generally speaking, I think China is going to be a safe haven because they're going to continue to produce, they're going to continue to grow. As you know, interest rates are going down in China. So it could be a safe haven. It remains to be seen, but I think given the fact that it's moved down so much, probably a good idea to increase in China.
Okay, so increased exposure to China. We're seeing a marked move, of course, in gold, and we had a Goldman Sachs analyst on earlier in the show with a forecast of 2150 within 12 months. What are your views on the yellow metal, Mark?
As you know, I've been very bullish on gold for quite some time, and I think it's going to continue to go higher in view of this situation. And at the end of the day, with the inflation moving up, some of these commodities will continue to rise in line with the commodity rise. You must remember that with money supply in America going up by 35%, and then with all the cryptocurrencies, we're seeing an incredible avalanche of currencies around the world. And of course, that means devaluation of currencies, and that means, of course, inflation and higher commodity prices.
Mark, just talk to us about other inflation or other havens amid this inflationary environment, and of course a reassessment of the impacts on global growth. You're looking at China, exposure to gold. Briefly, anything else you want to be adding at this point?
Well, at the end of the day, Asia generally looks pretty good because they're isolated from the situation in Europe. Of course, they'll be exporting to Europe. That will continue. So Asia looks generally, you could pick any country at some interesting opportunities: Thailand, Vietnam, Malaysia, Indonesia, even the Philippines. Of course, Taiwan is very big in the tech sector, Korea. So I believe that's probably a place to look. But interestingly enough, you get a situation like in Brazil where we never expected the Brazil market to be